okay, some of the experts believe what I just reached a conclusion, some of them differ. And then if you see that majority are supporting you, and then you do not have to say independence and objectivity, you say, okay, I see that they concur, so I believe that I will go long. And at this point in time, I believe that I will go long at this price. Either you say market price or at this price. Okay? You do not, and then you say with an expectation to have 15 to 20% rate of return. I'm just there for an infinite time. You just cannot say that, right? In finance, loyalty is always to the bottom line, right? You say, I'm taking euro and then forever? No. I'm taking euro with a view to make this amount of return. And then you say, that is my return objective, right? And then the loss, I have to accept the loss. So I know the prices now. The prices I'm going to enter, prices I'm going to exit, prices I'm going to exit with profit, exit with loss. So let me take questions now on fundamental analysis. You can ask me from your assets point of view, but I want this to be absolutely clear so that you know you get 20, is it 20? 20 out of 20.
When you say the experts, you just mean like bar chart, stuff like that, see what the, what do you mean, just creating?
The experts are available.
Okay,
They'll see.
all right.
Bar chart could be one of them. They produce experts' opinion.
You want like specific individuals, not like Financial Times, .com or something like that? Like, you want someone's specific point of view?
Not point of view. Let's say if you're doing silver and then you see that the people who are following silver, they say, you know, the experts who are looking into silver, and some of them say 20 out of 25 people say that, well, this is a good buy at this range. And so you quote them. So this is one source, and then another source would be another way. That means you would like to remember that whether it's your money or someone else's money, it is the fiduciary responsibility to yourself and to others, both. If you don't do that, if you destroy your future, nobody will come after you. But if you destroy the future of someone else, people will come after you. Have you done due diligence? So first is your analysis. Second is touching base with experts. Then you come to the conclusion that, well, you know, if they support you greater percentage of time, then of course you feel more confident, yeah, I would go, right? But you achieve this independently of them, right? Isn't it? Okay. Then, before you make the recommendation, you already took care of your opinion, their opinion, and then you put them together and say, I'll enter at this price with a view to make 20% or 15% and then loss of 10%. So you calculate the prices. Make sense? Okay. I'm just giving you very common borders, but you unleash your creativity in there. I know many of you are already in this one way or the other. You bring creativity to your system. And this is just the outline of their necessities. Okay, once you do that, you go to the technical analysis. right? By the way, I have, even though I have it this front thing, but I also have details. So let me show you the details in fundamental analysis and then technical analysis, then risk management and mindset. So you do traditional country and industry analysis, you do strength and weaknesses, you do intermarket analysis. Intermarket meaning you look at the spot, you look at the futures, or you look at other market, options market, and then benchmarking with experts, and then you make recommendation. So I'm stressing the fact that, well, you do not make a conditional recommendation without consulting the experts. Because at this point in time, after you do your due diligence, you can make a recommendation, right? Look at this step, intermarket analysis. You do that, and then you can make a recommendation at this time. But hold on to that. You can say that, well, at this point in time, I'm leaning towards going long, right? But then you benchmark with experts and they say that they concur or differ with you. If you strongly believe in, if they concur with you, you say, okay, I go with it. But at this point I will enter, at this point I will exit, at this point I will exit with loss. Loss you have to entertain explicitly. Okay. So that's the technical analysis. So this is the risk reward ratio, we call it RRR, and that should be in your favor, right? Reward should be greater than risk. I mean, in right mind we do that. Can you do risk more than reward? Bungee jumpers, right? Hmm?
You could
Yeah.
have risk that outweighs the reward. It's not a good idea.
By the way, there is something called Hedge, you know that? I talked about Texas Hedge. Are you aware of Hedge? One of our guests might bring this up. Let's say, and this is, of course, very bad thing to do. So first thing first. They say it facetiously, Hedge, because let's say you take a long futures, okay, and it's going against you. Well, what does it mean, going against you? Prices are dropping, right? Yeah. It's dropping precipitously, right? So you are asked to put in more margin and so forth, right? So you see that, well, everything is looking dark around you. So you take more long. Okay? And it's going against you. While you do that, you buy a one-way ticket. One-way here. That's the Hedge. So, risk-reward ratio for these people are positively skewed for risk, right? And I know another person, I'm not going to name names, but I know another person who made his, I wouldn't say million, but that saved him, that trade saved him. His name floats around, you will see. And he was telling us that he was going, I do not remember whether it's long or short, but it was going against him. So he called up his broker and said something. The next day he knew, and also he was a professor, assistant professor someplace. He abandoned that and went into trading full time. And so he was prepared And in his words that I know I have to go back to teaching again. I don't know whether they will take me, but so he called up his broker the next morning to see the damage, and the broker was very, very joyous and shouted over this telephone. How did you know? Because it was either limit up or limit down twice. And what he did, what he wanted to do and what he did was totally different. And the market reversed. And the broker was ecstatic and saying, well, how could you know that the market will reverse itself? So he was not telling us to to say, okay, you know, there is something called luck or something. Or he was just saying that, well, things happen that goes for you or against you. So in this class, please don't do that kind of thing because we do not support that. So technical analysis, you do the wind analysis. I do not have to talk about this, but you have to benchmark before you make conditional recommendation. Okay, I might need 10 more minutes today, so I'll pay you back. Okay, if I need it. Okay, so do you follow the pattern by now? I think you know the pattern in technical analysis. I think it's 18 points, right? So you have to make sure that all the charts are making a story. Okay, this is your story. Right? This is your story. You make it a bestseller. That's what I'm saying. All right? So when you guys are sitting side by side, going through the same training and looking at the same data, one says go for I see upward movement, and I say I see downward movement. Right? Do not quarrel. This is your story. Okay? And then before you give the recommendation, you just say that I touch base with the experts and technical side of it. And if they say that, well, this is the right time to buy, then, right, this is the right time to buy. Hedging analysis, even though it says only you do ID and you do the basis, in short, it looks short, but this is very intensive. So I want you to make sure that both ID of futures market and ID of option markets, you do it correctly and submit. When on your assignment, if you go, I made comments there. So look at the comments, and then if you are still not clear, make sure you're clear. So there are two issues here though, under the risk management, two issues. Even though I say risk management, but there are two issues. One directly with risk management, another about the investments. But let me get to the first issue. Once you get a market, let's say short hedges dominated. This is the institutional and big money player. Those are the people, not the short ones, not the speculative ones. You are going to talk about hedgers, commercial hedgers. So once you look at those and you see one dominates, like short hedges dominate, that is one condition of backwardation market. But the other condition of backwardation market is that F sub 0 is less than expected spot price at maturity. Expected spot price at maturity. Where do you get this data? It's yours, right? You have to figure out expected value. That is number one. Then you can go and do the environmental scanning. Do not do environmental scanning and let others form or mess up your brain. You do that because by this time you are well educated in your asset. You have done the fundamental analysis, you have done the technical analysis. Then you are forming that I expect this to be higher, right? So if the future says it is $1.68, and let's say for your case, euro's case, what is euro right now? What is it like per dollar something? Is that means
They were saying that like it might come down closer to like exactly the dollar.
exactly dollar
That's
right
what
now?
they were predicting, but I don't know like what it is like today.
Okay. So was it under like we were better? There is no better here. I mean, we were stronger.
No, we got close, but it's still above.
$1.08. Okay. Okay. So $1.08. Okay. So kind of a par. So once you get to that, what do you think? The future says, let's say $1.10. I don't know what the market's expectations are. Maybe it's $1.10. That will tell you what the market is expecting, right? Where is it leading? So you say the current price is $1.10, spot price is $1.08. I think it's going up, and given the measurement, the movements you see in there, I think it's going up to $1.20. That means euro is strengthening. Maybe I'm maybe saying the exactly opposite of what you want to say, right? I'm just making a case. So that's your expectation. So you are doing it through fundamental analysis and technical analysis to get an idea of expected spot price at maturity. Then you check back with experts. Don't do that beforehand. Then you lose your independence. Okay? Once you identify this backwardation, contango or mix, and then you go to those 8 tables, and you already tested today, that is what happens if basis, rising. Is it going to worsen the position, or, there was a multiple choice, something like that. So once you know all those situations, then you bring in basis into the picture, right? So far I talked about risk management. That means in risk management you need to identify backwardation or contango. In backwardation and contango there are various things that you do. All 8 possibilities I gave you. Right? Okay. Number 1 and number 8 are the situations where there can be an opportunity to enhance the return. Return enhancement opportunity, number 1, number 2. If you spin the things around, it is same thing like implied volatility. You see, this is an ingenious market mechanism where you take the thing and you spin it in such a way you get to conclude something different. So under the risk management, you say, I did all the risk management, but it falls under table 1 or table 2, which means you have to know the basis, right? Upward sloping or downward sloping, if it is backwardation and significantly downward sloping basis, if you can prove that, then you say, I have an opportunity here that I took a short position. I will take in the futures, I can take short position in spot, I will take short position in futures too. This is popularly known as Texas hedge, but this is a very educated Texas hedge. Right? So in risk management, you do the return enhancement. Is it clear though? I mean, are you clear? This is where you may find a little bit of a problem, but is it clear what to do? So please make sure that you understand and do the basis as well as market ID in second and the third. Okay? what is the thing? I mean, I went on, say, for your help, you can just follow these things. It's a backwardation means this, short hedges dominate, contango that, and slope of basis or movement of basis. You have to put together to get to return enhancement thing. And the last thing is, did you watch last night's basketball game? Why? Again, I'm going to ask a very open question, okay? So that you can enter from every side. Why did you think Duke won? Why they won last night?
The refs,
Okay,
they have a good coach.
okay.
They won because they scored more points than their team.
Okay. Yeah, it was not given to them. They earned it. Yeah. Okay. You see, if I'm bringing in the mindset now in here. They did a study long time back. There are two people. If both were alive, both would have gotten Nobel Prize. Kahneman and Tversky. They say hot hands in basketball. And that was, at that time, Philadelphia had Dr. J. So they say, usually, what do you say? That somebody who is a lead scorer, you are having the ball and the lead scorer is by you, you always have an instinctive movement that I have to give it to him, right? I have to give it to him. Either you want to give it to him or you know that, well, you have been told to give it to him. Okay, so they asked an interesting question. Hot hands in basketball, how far this is true? So they ran an experiment with the hot hands and non-hot hands. And guess what they found?
You mean like shooting?
Yeah,
The percentages are the same.
percentages are the same. Yet, regardless of that, and that was a path-breaking paper. Regardless of that, you still say hot hands will get the ball, right? If you look at the percentage of shooting, you'll see they are shooting 20 times and got 10 of them in. Whereas the other ones, they had equal number, 50% probability. They might have shot 2, missed 1. Okay? So, then why is it happening? Why do they get this ball? One of the other things they say nowadays, that when all time are not equal, there is a crunch time and there is a normal time, right? These hot hands can or is expected to deliver during the crunch time. That means they get into zone, some kind of zone. And what happens if you go to Bulls days, Phil Jackson, now they say that he has a Midas touch, and he wished that he had 11 fingers. And so wherever he touched, it turned into gold, right? And one of the things that he did is he used to make Michael Jordan, the egos of the world, Michael Jordan or Lakers, who's the guy? Kobe Bryant. Go through rigorous training, 1,000 free shots and all of those, right? Early morning and so forth. He used to make them do that. But one thing he used to do before the game, clear the mind completely. Mr. Zen used to do Zen meditation. The reason is, he said, my job is to train your muscle and every parts of your body so that there is a muscle memory. But I do not want to get your mind in the way. Mind will hesitate. Oh, should I take this shots? And so I give you one example. If you go back, and there are videos out there about this. Michael Jordan's famous shrug. He scores the point, and he was back walking and saying, my mind cannot fathom how it went. Don't ask me. So this is normally known, being in the zone, being in sync. If you have your mind out of your way. So in investment, similar things happen. You do your due diligence over and over again, over and over again. And then at some point you have to shut your mind and take the decision. That is the decision making, that where your intelligence comes through. So I will talk some more on this and give you some more examples of this thing. That winners, I can, if you take the fMRI of your brains before and after this class, I can make your left side of your brain more red. That I can do with the state-of-the-art techniques, but I cannot make you winner. Winners are those who can disengage their minds. They do not worry about what's happening, temporary movements and so forth. They do not worry about it. One of the things that when I asked you, did you see last night's game? Yeah, there are people that come in, and those people are very, very. This is a young guy, very religious guy. Do not talk much. Yes sir, no sir, and all those, right? But when they were 9 points down, he just knew that he has to deliver. Simple as that. He didn't think, I'm a freshman. I'm not even in the first three of them, the three that are famous. I just have to deliver. He totally was disengaged. I don't know whether he knows that. Science will find it out. On top of that, Sheshesky, he has seen so much things around, right? And one added last night. Go and do it. I saw this being done by previous one. This kind of comfort or confidence building is crucially important. So both, I mean your coach and reference to the individual, and the individual may be in the zone at that point in time because nothing could affect him at this point. Whereas those things have affected other three, but not him. So that is the point that you need to take care. So I would like to just go through this very closely, and I want to know can you give me a first checkup of your efforts? Not entirely. I would like to know whether you have dealt with all of those. First checkup. I would like to go around the room next time. Because your presentation begins April 21st and 28th. And while I do the first checkup, where you are and so forth, at that point in time, I will ask for volunteers for 21st presentations, and I will also know how far are you at that point in time. Okay, so once we are done with April 21st and 28th, 5 and 5 presentations, and then I will start talking about your group project right from there. That is, your group will be 2 groups. I have told you the names, right? Or did I not? Yeah, 2 groups, and 2 groups. You guys will select 3 assets from each group together. I mean, say okay, like there are S&P and S&P, both of you in the same group. You decide maybe that, well, his presentation is better, or maybe he will say that, well, Jordan's presentation is better, include Jordan's. Okay, so you do it for groups case, and build up the thing. And these people, when you hear their short biodata, you'll be amazed. So if you want to look for moving into these fields, maybe this is your chance to impress them. Okay? Thank you.